Hello again, everyone. I'm Scott Welsh, and every Thursday we get together to talk about how to beat the market. And oh, do we have a fiery topic this week for you? Let's get right to it. Three things today. Indicators are under attack lately, it seems. Now, maybe it's just my part of the world where I'm hearing talk about indicators and reading articles about indicators and how useless they are. I guess I'm just curious why lately. Again, maybe I'm just happen to be running across these articles myself. Maybe your world is fine. However, it seems to me that indicators are under attack, and I am puzzled. Why? Don't get it. But if they are under attack, what do the numbers show? Right? I hate arguments that don't have an answer. Oh, I think this and I think that, and no one can ever prove anything. And so we're just going to talk and talk and talk about it and both end up angry. That's pointless. Don't waste your time. But if we're going to talk about indicators, we have numbers. We have the answer, whether they work or not. So, what do the numbers show? Do indicators work? And three, we're going to talk about how badly the stochastic indicator beats the market. Giving something away? Listen on and we shall see. All right, getting to know me. Here's me. As you may know, I was a tennis pro for 20 years and played tennis all my life before that. Tennis is still a big part of my life. I watch it. I love it. I tweet about it. And here's a shot of me. Kind of a funny look on my face. Didn't particularly like this backhand volley. Doesn't appear I'm watching the ball. Did you know that most people, almost no people, actually watch the ball? I can give you a tennis seminar some of the time, but there's a shot of me. Hope you enjoyed it. Let's move on. Indicators under fire. Again, I've heard a lot of talk about how worthless indicators are. Again, why? Why is this happening? Were the creators of these indicators just off their rockers? Right? Most of these indicators that are on all of our charting packages were made years or decades ago. Were these people that made these that are given to us for free, that have complicated mathematical computations that we just give for free? It's like, oh, we give free indicators, right? They just give them to us. They did all this work, traded it themselves, and then just gave it to us. Were they just off their rockers? I mean, is it just worthless to have these on our platforms? Or were those indicators good back then, but this is the new day? This is the different time. It's different now. And those silly little indicators just aren't relevant, possibly. Or are we traders, are you and I just too plain stupid to learn, quote, the art of trading? And we're just so incredibly banal, or is it banal? Actually, it's both. Are we so obtuse that we don't want to learn? We just want indicators. Indicator goes down, I buy. Indicator goes up, I sell. I'm too stupid, right? Is that just us? Are we too dumb to learn to trade, right? And so we rely on indicators and then stab ourselves in the face because indicators are terrible, right? Listen, if indicators do not work, if they're just silly hieroglyphics on a chart that never bring profit and always lose our money, then I get it. Anyone who says that indicators are worthless is doing us all a public service, right? It's like telling us all, don't put your hand on a hot stove, right? It is a worthwhile public service. So thank you if they don't work. But if they do work, then what? Why are they telling us not to use something that works? You see what I'm saying? Is that weird to you? It's absolutely weird to me, which is why we're talking about it here. I don't get it. But let's move on. All right. If you're on the Wednesday newsletter, please be on the Wednesday newsletter. It's the best newsletter in the whole world. And that was a quote from my mom, who would never lie to me. All right, but go to my website, scottwelsh.me, get on the Wednesday newsletter. We talk about stuff like this. Now, As you know, if you read it, I chose the stochastic indicator to have our little talk about whether indicators work. And specifically, I chose the stochastic. Now, I like other indicators. I use other indicators. I've studied other indicators, but stochastic was a perfect place to start. It's my first indicator. I built many systems using stochastic. It's been around forever also, so it's been there. It's on every charting platform. I thought, golly gee willikers, that's a good place to start. And as you know, if you read, I use the ES, which is the futures contract for the S&P 500. It's the whole index, right? I mean, that's what the experts want us to trade. Trade indexes. It's the only way. They sound funny. Anyway, so I put an indicator, a basic one that everyone knows, on an index. And I used a futures index because, well, we get more leverage, bigger numbers. And I computed the results from 1998 to now. By the way, I won't say it, but that period from 2000 to 2002, how many times do I have to tell you? Go back and study that. Wow, that was a really interesting time in the markets. Okay, what did I do yesterday? I took only long signals. As you know, market has an upward bias, so let's test it long. Very few people buy and hold short. Have you ever, seriously, have you ever met someone who sold and hold? Has anyone ever sold an index and then just held it? I mean, they would be bankrupt 1 million times over, right? So anyway, I'm competing against buy and hold, so we only went long. Okay? There were no stop losses, no targets, nothing. It was indicator signal and a time limit, which I use 3 weeks, as it says on the screen. Signal 3 weeks later, come back. Is there profit? Is there not profit? And what were the results? Starting in 1998, the stochastic return beat the buy and hold return by 158%. See what I'm saying? Stochastic signal, buy it. 3 weeks later, exit. Nothing else. Again, no stops, no targets. Because if an indicator works, it should go in the direction that it's predicting, right? So that's what I did. And it beat a buy and hold, buying and holding at the exact same time as the first trade on Stochastic. Stochastic indicator beat buy and hold by 158%. Now, over that many years, that's not a ton of money. Oh, but it's a pretty significant event. I don't think you can deny 158% is nothing to sneeze at. Or, or, oh, see on the screen. Anyway, Stochastic also had 3.6 times less drawdown. See what I'm saying? The Stochastic had 158% more profit, and the drawdown was 3.6 times lower. So I didn't have to risk more to get a bigger return. I risked less. Now, by any metric, by any argument, how is that not a complete and utter victory for the indicator? How? How do you say that buying and holding is better when it has 3.6 more drawdown and less profit? How can you say that indicators don't work? How? Table that. But you could say, well, I cherry picked it. And of course, right, I don't have any axe to grind. I'm just providing information. But you're right. Maybe for whatever reason, I just wanted to impress you. Are you impressed? Did I impress you with my numbers? Okay. I decided then to use a different holding period, right? Remember, I used a 3-week holding period. Fairly arbitrary. I just thought that sounded good. All right. It didn't seem fair to me to make an indicator produce profit longer out. That just didn't seem right, right? These people created this math computation. I don't think they were predicting, well, when the stochastic goes to oversold, then that means 6 years from now you're going to be in profit. To me, that just wasn't the spirit of an indicator. Totally my feeling, right? So, call me an idiot. That's fine. I'm happy to have your idiot calls. But for today, I said, well, let's hold it longer. And who did I say it to? Myself. So this assumes that a positive signal, meaning an entry signal, which I talked about in the newsletter, when stochastic goes down over oversold below 20 and creates a signal, fast line over the slow line while under 20. Again, I showed a picture of it in the newsletter. Okay, positive signal on stochastic will provide profit 60 bars out. Now, you know we use daily bars, so we're saying that a stochastic indicator will get you profit 3 months out, right? How many times do I have to say it? Stochastic entry signal, you walk away, come back 3 months later, profit. If it's a good indicator, that's what we'll get, right? Keep in mind, this is a dramatic and sustained movement after just one signal. And frankly, it's probably asking too much, right? Which is why I use 3 weeks. But here we go. What are the results? Well, I used one contract again, same as before. 1998, same as before. What happened? 60 bars out. Stochastic produced 67,658 of profit with a 21,588 close to close max drawdown, meaning that after each trade closed and it went through a losing streak, you would have seen your account drop by $21,000. Okay, that's the maximum. That's the worst it ever did. It only did it once, and that's the worst it ever did. Now, as you know, we use a hypothetical $20,000 account. So I get it. That would have bankrupted the account. But just table that, okay? Just give me a second. Okay. This profit beat buy and hold investing once again, this time by 216%. By holding it longer off of a signal, it actually beat buy and hold worse. Does that surprise you? Surprised me, right? Now, I know you said, well, 21,000 is bigger than 20, right? The maximum drawdown of buying and holding the ES was $55,625. I think that would have bankrupted you. Buy and hold is the only way to invest. Experts want us to do it. So I understand that 21 is high, but buy and hold is 55 for crying out loud, right? So if we have to use a bigger account size, fine. But you're going to have to need more than double the account size for buy and hold, right? And here's a fun fact. If you bought the ES, went long in 1998, you would have still had a negative balance through 2012. That is a fun fact for buy and hold index funders. Isn't that interesting? Now, there was a huge bear market, 2000, 2002, and I don't know if you knew, a huge bear market, 2007 to 2009. But the stochastic went positive right around 2007, right? And that's still, I get it, but that is many years before buy and hold even made you a penny. Isn't that crazy? What's the bottom line? Um, Am I crazy? It seems obvious that indicators work, right? Well, what's the opposite argument, right? The only opposite argument is some other form of trading works better. And does that mean a different indicator? Well, clearly, if you're saying that, then you're still bolstering the indicator argument. And if you say price action or, inside bars or dojis or engulfing patterns, we're kind of still talking about an indicator of some sort, right? Even a price action indicator is kind of an indicator. So if you've got another trading method that works, then you are also saying that indicators work, right? There's no way around it. It kills buy and hold. Using an indicator would destroy someone who doesn't use an indicator. See what I'm saying? Now, well, I could use a different time period and buy and hold would have worked. Maybe, but why does shorter time period make more sense? We're looking for the long term, right? Longer term means more significant data. I would love to hear it if you have an opposite argument to say that indicators don't work, but they beat it by over 200%, and they have way, 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 way less drawdown. Now, this isn't a seminar or a webinar or a sales pitch, right? I don't gain anything by talking to you about this. I don't have my super stochastic system to sell you, right? We get together on Thursdays and we just talk. It's free. It's been free for a long time now, right? I'm not selling you information. I'm not selling you information. I'm just giving you information. Okay. But think about this. What is gained by someone who says indicators don't work? What's the gain? See, it's kind of a weird question, isn't it? They have something else to sell you. Well, then is it an indicator? So indicators don't work, but here by my indicator? Like I don't get it. All right. If people say that these mathematicians that made these indicators say they don't work anymore, well, they do, right? I mean, they do. So anyway, I like doing research. It is fun for me. I love sharing with you on Thursdays in the newsletter what I find. Um, Bottom line is, I don't want someone to tell you indicators don't work, so you stop going down that path and you could have been making money, right? That clearly wasn't the best system you've ever seen, but it was way better than buy and hold. I mean, just the stochastic signal, as I described, that's something, right? If you have an account that can take the drawdown, you'd have more money, right? It is something you could use. We can do better, maybe, but I'm just saying. All right. Bottom line is, okay, it's clear. Indicators not only work, but they can help you trounce the market, right? That's what the numbers say. All right, you can find all of my courses still on kajabinext.com. Again, join the newsletter, scottwelsh.me, and just hit the button and join the newsletter. There's my email. You can email me. You can comment on the YouTube channel. You can go to Amazon and leave a review. No, I don't have a book. I just hear every podcaster say, go to Amazon and leave a review. Go to my website and leave me a review, whatever you want to do. Love getting together. Love talking with you. And we'll see you again next week. Bye for now.